Good morning, guys. It's Tuesday, March 18th, 5:30 a.m. Central Time. Grain markets are mixed this morning. May corn futures down 4 at 457. May soybeans down a quarter at 10.15 and a quarter. May Chicago wheat up a quarter cent at 568 and three quarters. May Kansas City wheat up 2.5 at 608. May spring wheat up 1 and three quarters at 616 and three quarters. The wheat market did rally yesterday. Let's start there.
Wheat futures rose on Monday amid concerns over crop damage caused by severe winds. Windstorms and tornadoes impacted wheat crops throughout the Midwest and Plains regions over the weekend. The full extent of the damage remains uncertain. However, winds and dust of such high intensity are expected to cause significant damage to affected fields. May wheat futures climbed to their highest level since February 27th. Futures were also supported by Russia reducing its wheat export forecast and last week's strong U.S. wheat export sales.
Kansas City wheat contracts, the HRW futures, led the way higher yesterday, and they were higher overnight. We've been kind of back and forth. But I think this is because the concern regarding the high winds and potential damage is in the southern plains. The state of Kansas had a crop progress report out yesterday, and the crop was rated 48% good to excellent, down from 52 the prior week. I'm not sure if the damage is accounted for in these reports. I know it's supposed to be accurate as of Sunday, but I just don't know what sort of handle that they may have had on this situation headed into the weekend. To look at some bigger picture wheat stuff, we've got a fairly tightish world wheat ending stocks to use ratio situation. We're the tightest, projected to be the tightest since the 13-14 marketing year. I threw this chart in this morning. This is world wheat ending stocks to use ratio with China excluded. And the reason I excluded China is because China is projected to hold 50%, half of all global wheat ending stocks. Yet China doesn't export any wheat. So this wheat that's in China, it's just there. It's not going anywhere. It's not available for export. And when you look at it through this lens, the stocks to use ratio situation is the tightest since 2007, 2008. And we had a hell of a wheat market during that time frame. Maybe it's foul to use this chart and it's not fair, but I think it's a different way to look at it. In any case, I feel as if wheat is awfully cheap in the $6 neighborhood. Personally, just an opinion.
The National Oilseed Processors Association released February crush data on Monday. The U.S. soybean crush declined to its lowest level in 5 months, with NOPA members processing 177.9 million bushels. The crush was down 11.2% from January and down 4.5% compared to February 2024. The February crush fell significantly short of the average trade estimate of 185.2 million bushels. End of month soybean oil stocks in February climbed to an 8-month high of 1.5 billion pounds. Stocks were up 18% from the end of January, but down 11.1% versus year ago stocks. Stocks exceeded the average trade estimate of 1.4 billion pounds.
This is disappointing. It was seen as being a little bit bearish. I think that you could make the argument that we're still on target to hit USDA's projection, although now, at least for this month, we're running below the same month last year. And if that were to continue, perhaps USDA would have to make a downward revision to its soybean for crush projection, which is not good. Soybean oil stocks have risen, and I think usage has declined. There's so much uncertainty regarding biofuel policy in the United States. We're exporting some soybean oil, whereas we thought that would never happen ever again because we were going to use so much soybean oil for renewable diesel and that sort of thing. The story with 45Z is that the Biden administration basically dropped the ball on the whole thing. Trump was inaugurated, and on January 20th, he pretty much opened a 90-day comment period on this. So you got another month or so, I guess, until maybe we know some more about it. But I think until there's some concrete government policy, this thing could go in the wrong direction. Crush margins have backed off. You're talking break even to maybe, I don't know, slightly negative, slightly positive, depending on where you're at in the country. USDA is projecting that we're going to crush a record amount of beans this year. Make no mistake, 2.41 billion bushels is the projection. In their Ag Outlook Forum in February, they projected that for the 25-26 marketing year, the new crop marketing year, that number would increase to 2.475 billion. That would be a 2.7% increase from this year's already record high projection. I wonder if some of that is at risk because of the lack of biofuel policy. If maybe this thing's not going to expand in the way that we'd like it to. And given the way that Brazil is expanding and the way that our exports are declining, we really need the demand here at home.
China renewed export licenses for U.S. pork and poultry facilities on Monday. The renewals, which are valid for the next 5 years, covered processing and cold storage facilities whose licenses expired in February and over the weekend. However, China has yet to approve export license renewals for hundreds of U.S. beef facilities. According to the Phase 1 trade agreement, the export licenses were expected to automatically renew. In February, President Trump implemented a 10% tariff on Chinese imports, which he subsequently increased to 20% here in March. In response, China slapped retaliatory tariffs on roughly $21 billion worth of U.S. agricultural products.
So is this good news? We're moving in the right direction, potentially.
Yes, and you were correct yesterday saying that this headline basically had no impact on the markets. I was being a negative Nancy for no reason.
Shame on you.
Yeah, bad analysis. If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our recent premium videos?
So Howard Lutnick was on Fox News or Fox Business talking about this Trump proposal or idea that nobody who makes under $150,000 would pay income tax. And that's fantastic. I love it. I don't like paying I don't like paying taxes. I'll raise my hand. But Paul Neiffer went through yesterday, and Paul is the farm CPA, is an excellent accountant, and ran through some of the pros and cons of this particular plan and proposal. And there are some cons. It sounds great. I love it. It sounds great, but there are some cons, and we discussed that on Monday, or this was actually Friday. I'm sorry. I did a video regarding the corn supply and demand situation, both domestically and globally, and how it's actually pretty darn tight. I had 9 charts in which I kind of went through and described the whole thing. Following this video, I had a bunch of questions from our subscribers, mainly end users. Joe, you're telling us the corn situation's tight. What do I do about my feed needs? That sort of thing. I also had questions from farmers. Joe, how do I protect the upside? Which doesn't make any sense if you're a farmer. But in any case, I'm going to discuss both of those items in today's premium video, which will be out a little bit later. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. This is information only. We don't want to sell you anything else. We don't want to do your brokerage business. We don't want to do your crop insurance. We don't want to ever really call you or talk to you. We are available for questions and stuff via text and email. Always happy to help you out in any way that we can. We don't sell your info. We're not sponsored by anybody. Nobody owns us, so your contact info isn't going to anybody. You can sign up this morning. It takes about 30 seconds on your phone. You can do Cash App, Google Pay, credit card, any of that stuff. Takes about 30 seconds. Give that deal a shot this morning, guys. I will forward you a copy of this morning's email.
Brazil's soybean harvest is advancing at its fastest pace for this time of year in at least 14 years. According to well-followed private group Ag Rural, as of last Thursday, farmers had harvested 70% of the crop, a 9% increase from the previous week and well above the 63% recorded at the same time last year. Despite the accelerated harvest pace, concerns persist over yield losses in Rio Grande do Sul due to hot and dry conditions. Ag Rural also reported that as of last Thursday, Brazilian farmers had planted 97% of their second corn crop.
So in Brazil, soybean harvest moves from north to south, whereas in the United States, it would move from south to north. So I don't know that they've gotten into all of the bad stuff in the south, but to my knowledge and what I've been told, the crop's 170. Call it a 170, call it a 169, call it a 171, depending on who you talk to. I don't know if we're going to stray too far from that at this point. The yields in central and northern areas, I think, were really good. We're now going to move on and talk about the second corn crop, which they're basically done planting. Forecast, according to our friends at Crop Profit, the Brazil second corn areas are going to see 80% of their normal rainfall over the next 14 days. This is enough rain, I think, for second corn country. Interestingly enough, one thing I learned this morning is that the Euro model changed its, and if you guys are weather people, you can tell me if I'm wrong. The Euro model changed. It changed everything like a month ago, and now they go out further than 10 days, and they're using AI in some regard to predict the forecast. I don't know if this is good or bad, but it's a little bit different compared to how it used to be. I think that's what I read this morning, because the time frame on all my maps changed. It used to be 240 hours, and now it's pushed out to 360. And I said, why? I Googled. I said, why did it change? And I guess there was some big change to the euro model like a month ago. I know it's very exciting.
Interesting.
What's up next?
U.S. Trade Representative Jameson Greer is working to ensure smoother implementation of Trump's upcoming tariffs on April 2nd. After months of tariff-related confusion and market volatility, Greer is bringing back parts of a traditional policy process. This includes requesting public comments on reciprocal tariffs. Trump could face legal challenges for using the International Emergency Economic Powers Act to justify the tariffs, as trade experts argue it may not qualify as a national emergency. The administration is still determining how to structure the reciprocal tariffs for each country, with final decisions yet to be made. While some officials and business leaders worry about economic impacts, Trump remains confident in his tariff plan.
Some of this Bloomberg piece was like an opinion type piece, and then some of it was factual. The way that they painted Jameson Greer is that he's like a boring lawyer and he's going to counteract Trump's like outlandish side. Is that the way you
Right.
read it? That's kind of
Yep.
the way I read it.
That's how I read it. Yeah, he's gonna like bring stability and level the
Yeah,
I
he's
don't
the,
know,
he's the
something like that. Yes.
level-headed lawyer, and Trump's the one who's kind of rocking the boat. So I don't know. We'll see what happens. You're going to hear more about Jameson Greer as the trade war persists, I guess.
U.S. corn shipments declined last week, but remain strong. USDA reported that 65 million bushels of corn were inspected for export during the week ending March 13th. The print was down 10% compared to the previous week, but up 25% versus the same week last year. Soybean shipments were reported at 24 million bushels. The print was down 24% from the prior week and down 7.7% compared to the same week last year. Wheat shipments surpassed pre-report expectations at 18 million bushels. The print was up a whopping 104% from the previous week and up 25% versus the same week last year.
The corn shipments are still very good. And I know there are a lot of people who are going to comment on YouTube. They're going to say, Joe, it's front loading. Guys, you've been saying that for months. The longer we go with this type of strong shipment and sales program, the weaker your front loading argument becomes. I'm not saying it's not valid. I'm just saying the longer we go, the weaker it becomes. The wheat shipments were really good too. I think the wheat situations, I think it's getting tighter, and I think the U.S. may pick up some export business. Soybeans, the shipments are not supposed to be great, and we were a little bit below last year, but not by a ton. What did cattle prices do yesterday?
Cattle futures had another big day. Live cattle were $1.35 to $2.35 higher. Feeders saw gains ranging from $2.60 to $3.02. Box beef was also higher. Choice was up $2.89 at $3.21.16, and Select was up $1.58 at $3.07.90.
Stock market's off a little bit this morning. The S&P's down 16. The Dow's down 110. Treasuries are mixed. U.S. dollars about flat. Crude oil's up 90 cents at 68.50 in the April WTI. The gold market is on fire, up 24 bucks, above 3,000. We're 30.30 in the April COMEX contract. Have a great day, guys. We'll be back on Wednesday.